Morning, Steve Ray in Chicago with the morning grain comments. Prices are a little bit higher overnight, led by the beans. Some people, I guess, feel that the soybean market is kind of winding down as far as U.S. harvest is concerned. And there might be a little bit of window here in which soybean demand from the export side could improve. There's still no resolution to the U.S. and China trade, so this new demand will have to come from other countries besides China, who normally buys from Brazil. But Brazil prices are quite a bit higher than U.S., which keeps U.S. in the game. We also doubt if farmers will sell much beans at these price levels, so that might support prices, especially on the crush side when we've got crushing still close to record high levels here in the United States. Over the corn, we're still looking at good news, bad news. Good news is that we've got strong demand, and there's expectations that in the next USDA report we could see a little bit lower crop size. The bad news is that long term we expect next year U.S. farmers to add corn acres, and that there'll be normal supply, especially out of South America, which could limit the upside in prices. And as far as wheat is concerned, wheat got a little spark on Friday after Egypt bought one cargo of U.S. wheat. We continue to see a little bit of short covering overnight. We still see too much wheat in the world right now, and more wheat down the road if we have normal crops in 2019. As far as weather is concerned, off and on showers here in the Midwest, better chance of heavy rains late next week. And as far as Brazil is concerned, continue to see above average rains across most of Brazil. Argentina is still seeing rains in the west, but dry in the east. Brazil soybeans are 46% planted versus 28 average. 35.8 million hectares planted versus 35.1 last year, and they're already estimating the crop at 120 million tons versus 119 last year. A lot of articles out about how China's trying to figure out ways to get by with less soybean meal in their hog feed rations and less imports of soybeans. So again, that offers resistance to the marketplace. The Russians said that they'll be able to export 30 to 34 million tons of wheat this year. Their earlier estimate was 30, and that could also offer a little bit of resistance to the wheat market. Right now, USDA is estimating this U.S. soybean carryout at 885. Range of guesses is from 940 to 1100. We're in a trading range in Jan beans between $8.40 and $9, and we'll probably stay in that range until we know a little bit more about the U.S. and China trade issues. Average guess for USDA is at 1813 as far as the corn carryout is concerned. Guesses are somewhere between 1730 and 1750 due to a little bit lower crop number. And we're still in the D's corn 360 to 380 range, and we could test the upper end of that range as harvest winds down. The wheat carryout, USDA is at 956. Range of guesses anywhere from 935 to 1 billion bushels. Higher number is looking for a little bit lower export number, while the lower number is looking for a little bit higher export. We tested 490 support last week. The next resistance level is the old resistance level at 527 and 530. I think we need to see more demand to push through that price level. Funds bought beans, meal, a lot of corn, and a lot of wheat on Friday. Continue to be short 60,000 beans, long about 20,000 corn, and short about 30,000 wheat. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.